Hello and welcome back to the Argyle Finance Solutions Summit. My name is Brittany Sullivan with Argyle, and it's great to have everyone joining us today. A couple of notes before I turn things over to our speaker. First, a quick reminder to stop by our sponsors' virtual booths at any time during today's event and for the following week. Our partners are committed to providing you with valuable content and a great overall experience. At any time during today's event, you can visit their virtual booths from the main agenda page, which include complimentary materials, information, and meet and greet opportunities. To ask questions throughout the session, simply type into the Q&A chat, and we will address your questions at the end of the session. Now, without further delay, I would love to introduce our speaker, Blake Mulligan, Senior Director of Solutions Consulting at Lease Accelerator. We're excited to have Blake with us for a session titled Beyond Lease Accounting Compliance, Optimizing Efficiency. Welcome, Blake, and over to you.
All right, awesome. Thanks. I really appreciate the introduction. Welcome, everybody. Good morning, good afternoon, wherever you are. Really thank you for spending the time with us today. So quickly, just want to introduce myself. I've been here at, kind of Insight Software, Lease Accelerator, for almost 2 years now. I started my career out with Ernst & Young as a consultant in the banking and finance space, specifically working with banks that had large trading operations. So always been working in the finance side with either banks or with previous startups as well. Additionally, my background specifically is around operational and regulatory change. So helping clients adapt to either new regulations or maybe once they've already adapted to those regulations, optimizing that process with automation and increased controls. So let's run through the agenda for today. We're going to start out with the market shift from compliance to ROI, right? So I already kind of teased that out a little bit before. Most folks have already adopted to the new compliance regulations, so they're really not new anymore. So folks are looking to shift. What's next? What can we do? What else can we do in this space? So that leads us to uncovering manual data and processes across stakeholders. So working cross-functionally within the organization to really improve processes. We're going to get into managing the lease lifecycle at the enterprise level. So beyond just the lease accounting, what happens within our lease lifecycle and where can we take advantage? Going to drill in a little bit to the value of asset level data, automating those data flows, and then ultimately into best practices. So going to get, start big picture and then get into some very specific examples. Now, throughout this webinar, we are going to have polling questions. So here's polling question number 1. Are you currently using any tools to manage your lease accounting process? Yes. Spreadsheets. Yes. Basic lease accounting calculator. Yes. Integrated lease management and accounting software, or D, I'm not sure. Now, really the difference between B and C, for those that are wondering, B is, yeah, we have a software provider, but it's really just a calculator for a lease accounting, whereas C is a full-fledged solution that manages your leases, does the lease admin and the accounting as well. We'll give everyone a quick second to respond to this poll before we move on. All right, thanks for the responses, everybody. So let's start with the market shifting to generating some ROI, some value. On the left, we see where everyone started, lease accounting compliance, so reactive, right? Just lease accounting, standards driven, audit driven, basically, hey, you have to do this now, so do it. And that's what people were doing, right? Just, I got to get compliant and I need to do it before year end or before this comes into effect. Now with that, a lot of people had fragmented data processes, information in different places. So it really was a kind of a scramble to get everything together and get it submitted. Now that that's done, and people have kind of done this a couple years in a row, it gets into this lease lifecycle management. So what else can we do? Where is there value? So we're shifting towards proactive and cross-functional processes. It's value-driven, right? Where can we generate ROI through cost savings and new free cash flow? Where can we, kind of take these individual silos that we used to have and create one system of record or a data lake, for example? Going cross-functional, multi-stakeholders, multiple budgets, and ultimately consolidation between applications and multiple vendors. All right, polling question number 2. What are the greatest challenges you face in managing your lease lifecycle? Option A, resources or battling priorities. B, month-end close. C, process management, or D, all of the above. All right. Thank you, everybody, for those responses. So what are the problems for each process owner? Let's kind of dive in individually to the segments or the processes of lease lifecycle management. And we're going to start with lease compliance. It's kind of the theme of today. Everything started with lease accounting compliance, record to report. And ultimately, we see the owner here is the controllership. And at the time, 2019 was a point solution, either being Microsoft Excel or, a simple system that just does the lease accounting, close the books every month, get it in, and meet the bare minimum from an audit compliance standpoint. Oftentimes, we see the problems here: manual work, poor upstream controls, bad data, and having to adjust entries either outside, if you were using a system, or again, right, if you're using Excel, that is all manual processes. So very labor intensive, lots of manual activities, and communication back and forth with email that really didn't have strong controls. So brings us to today, and we see all these different functions. So in this slide, we get a glimpse of all of those components of the lease lifecycle. They are individual silos, each with its own owner. It starts with capital planning. Ideally, the treasury is in charge, but in practice, oftentimes not really. We see that in large decentralized organizations, individual business units do their own planning, and treasury neither has visibility nor control on the lease versus buy process. Similarly, procurement activities are splintered. A lease is a combination of procurement and financing. So unless there's someone who can see the big picture and negotiate at scale, there's not a lot of money left on the table because the lessors are really calling the shots, right? No taking advantage of the full scale of your company's leasing. Then there's the challenge of managing the equipment leases and planning ahead to be able to return and refresh leased assets on time to derive the optimal financial benefits from the lease. Similar considerations apply to real estate, but usually it's a separate set of people managing those leases, and they should really be collaborating very closely with corporate treasury, accounting, and even ESG as we start to look forward and see that become more prominent in today's corporations. So here we can see each pillar of the lease lifecycle and what problem we need to solve for at each stage of the process. Poor decision-making from a finance perspective, data abstraction challenges, overpaying for leases, thereby squandering the economics of the lease, or data, loads and loads of manual effort, resulting in risk of human error and material misstatement. Now, also layered over this are the applications that we have here at Insight Software. Now, highlighted in this bottom line on platform is the SaaS platform. So knowing that all of these are interconnected and built on the same database. So truly it is one system. Now, over the last year or so, our team has been working with some of our larger customers doing health checks of their lease lifecycle. So using the model that we just shared, we have found that just optimizing their process asset lifecycle manager and the lease accounting manager better, they can achieve significant dollar savings in avoided costs. So, really what this is saying is that, take a client of ours that in 2019 adopted and they just were doing the bare minimum from a compliance standpoint. Well, we worked with them through this health check process and basically said, hey, there's tons of value, tons of opportunity that you can take advantage of throughout the application that you already own, right? So some examples in here, you see health check, reducing our close by 2 days, eliminating outside spreadsheets that we were running to work with end of term events and try to get responses from the various process owners. And then with that, we also put together a schedule of when they could adopt other applications without being overwhelming to take advantage and really, really work through the whole lease lifecycle. So that's all fine and dandy, but how do we make the business case for this and what can we expect? So let's start with just the lease versus buy here, and we'll work through each process. Now, every lease should ideally start with a lease versus buy analysis. To do this effectively, the treasury team should be able to dictate and periodically update the discount rate and other standard criteria. The field offices and individual requesters can then simply use the standard template to make their request via email. So what's important there? Treasury, controller, someone centrally owning all of the data and pushing that out so that everyone out in the field that's requesting new equipment is working with the same data set, centralizing it on both the data front, and then when the requests come in, centralizing it again, so one team can view that and can see the whole company-wide lease portfolio and the requests that are going out. Each analysis is stored permanently as well in the system for full audit purposes. Now we're adding the financing pillar here, Pure Lease Marketplace. The system can use the information on the lease versus buy document that is automatically generated to bid out the RFP to targeted sets of lessors on the lessor marketplace and have them compete on pricing, so the financing, to get the most competitive lease rate and the most flexible end of term options to protect the interest of the lessee. Centralized bidding and benefit from scale and use of lease lines for frequently needed homogeneous items scattered across the organization. So again, centralizing the whole process and making sure we have complete visibility and audit tracking. All right, so now we've actually signed our lease. The information can be transferred into the Asset Lifecycle Manager and supplemented with asset level details downloaded directly from the lessor's database. This straight-through processing eliminates human error and saves a ton of data entry effort. So again, starting to layer in some automation. Then, from the time the data enters the Asset Lifecycle Manager, it can be used for operational reporting, end-of-term planning, and processing, and of course, lease accounting. It's complete and accurate and available at the push of a button at the time of fiscal close. No more back and forth communication and follow-up to get updates from the field. So now, Real Estate Manager does for real estate leases what Asset Lifecycle Manager does for equipment leases, except that it typically a different group involved and a different data sets and activities. So a dedicated space for a real estate team or a legal team to view lease contracts, run reports on real estate portfolio, and all of the unique information that they need that ultimately is separate from accounting. Because it's fully integrated, the two systems communicate with one another so that any update made on the real estate front is automatically passed to Lease Accounting Manager to update and generate the accounting So the last piece of the puzzle is ESG reporting. We can leverage the tracking of emissions data at asset level and real estate space level to gain visibility into emissions and plan ahead to reduce the carbon footprint of the organization. Data is king. So if you have the data, reporting and audit becomes so much easier. On to our third poll. What other challenges related to lease lifecycle management are you looking to address this year? A, lessor, specifically sales type or finance leases. B, emissions tracking. C, ERP integrations. D, system consolidation. E, real estate administration. And F, none of the above. All right, so let's talk about managing the lease lifecycle at the enterprise level. I like this slide just because it shows all of the particular decisions and events that happen over the course of any leased assets. We see all the way from start through end of term. And end of term, right, that goes beyond the end of the initial term, getting into those partial end of term events, buyouts, renewals, etc. Again, I like this because it just shows how complex and all the individual pieces that go into this and why, right, having a solution to track all of this can be incredibly beneficial. So why do assets matter? Ultimately, assets are actionable. So whether it's owned, leased, or embedded, tracking and having that asset level data is incredibly helpful. On the real estate side, any property or space within a property, so offices, conference rooms, exterior signage, parking lots, all of that can be tracked individually and also rolled up into one kind of parent asset as well. Down at the bottom, we see scope 2. So from an emissions perspective, we've got that designated there. On the equipment side, any piece of equipment that is physically distinct or independently identifiable can be tracked as such. So if we have an MSA with multiple servers, machine tools, whatever it may be, we can track it at the full schedule MSA level, run our accounting at that level, but ultimately still maintain individual asset attributes. That can be serial numbers, that can be asset owners. So when it comes time to do a renewal, maybe it's a partial renewal, you just pick the assets that are being renewed versus returned. Makes that process incredibly automated. So project drivers. Quick kind of recap here. What are some common project drivers that we've seen? A lot of it does come from the CFO. So looking to consolidate real estate administration and lease accounting. Maybe doing some automation around equipment lifecycle to help cut down on costs and risks associated with end of term or evergreen or really leases that are going month to month. Sometimes it's coming from procurement or treasury looking to improve their spend management and financing execution. We've started to see some VP of sustainability, but again, a little lower on the list there. And then lastly, just the CFO maybe looking to support a move to subscription revenue. So, doing as a service type revenue generating models. Of course, those are typically embedded lessor leases, and that can get quite complicated. Now, this brings us to what I believe is our last poll of the day. Have your organization adopted any processes outside of lease accounting to drive better leasing decisions? So yes, we're making better decisions on the front end. So running some sort of lease versus buy, or maybe centralizing our financing sourcing initiatives. Yes, but on the back end, so end of term, we're running reports, sending automated notifications to our asset owners, asking for updates around end of term. C, yes, doing both, beginning and the end. Fantastic. D, no, we're still focused on sustainable compliance. And then E, not really sure where we are on the journey today. So let's talk about control with the lease lifecycle straight through processing. Really busy slide here, right? But what it shows us is all of the different pieces of the lease lifecycle journey. and really all the different points of where data is stored, whether that's procurement, asset management, in your ERP, SEC financial statements, FP&A, et cetera. It's all there. So there's all these different pieces that ultimately make up this puzzle. This is a great opportunity for integrations. So, we do have integration opportunities available for all of these to help minimize any human error and really shore up those controls. I want to show this really quickly, see where some of those opportunities can come from between sourcing, administration, end of term, and integrations. Talked about this, but just a nice summary here. So one of those control points, we've talked through it, is a lease versus buy. Now, this one in particular, I just like to show so you can see a quick example of what our lease versus buy summary looks like, and kind of understand how it can be a control point in the process, and ultimately where we can centralize that. The other end of the control point, the end, so end of term, want to cut down on evergreen. This is kind of a snippet from one of our dashboard reports on evergreen, so you can see where it's going up. That's usually a red flag, an area for companies to dive in and try to get a control on that. We have lots of automated reports that will go out asking, proactively ahead of time, letting you know these are coming up end of term, asking for updates with escalation policies embedded. We already talked about kind of all of the different segments that play into the data, but here's just a quick graph or kind of image of how we do our integrations. So this is just an example with fleet management. So you can see some of the providers there and ultimately how we get that data into Lease Accelerator. And then once we got that data in Lease Accelerator, what else can we do? So maybe sending the journal entries to your ERP, pulling master data like FX rates or IBR information from your ERP into Lease Accelerator, and then ultimately scheduled reports delivered by email as well. So you can see there's data going in and out of Lease Accelerator, making it that central place for all of your leasing data. Another kind of slide just summarizing the integrations between systems, how teams can be collaborative. So with real estate and accounting, what does that process look like? Where are there embedded control points along the way? Now, I said earlier, last polling question, this one isn't really a polling question, but if you would like a 30-minute lease lifecycle process review with Lease Accelerator, so myself or someone from my team, quick yes, no, or yes, but maybe at a later time, would really appreciate that from everybody. All right. Gonna go ahead and share my screen here and we can get rolling with the demo portion of today's session. So what we're actually going to do a quick run through of is the Lease Accounting Manager and Asset Lifecycle Manager application that we saw during that session. So we did cover the full suite of solutions that we have in our Lease Lifecycle Management, but we're just going to focus today on those two being, like I said, Lease Accounting Manager and Asset Lifecycle Manager. Now, when we look at the screen here, this is our home screen, our dashboard, and because it's a SaaS-based solution, I can access it at home, at the office, and all my data is hosted on the cloud. Do have proper access control that we can break up by, a user's role or, the divisions, entities that they support. Just a quick kind of orientation. On the left-hand side of the screen, we've got our navigation bar. So I'm going to be going through that today in and out of different pieces, whether it's reporting or looking at specific leases. Main screen, like I said, the dashboard. So this is where we have all of our key operational and accounting metrics. That can be your right of use asset, liabilities, or expense details. Maybe it's more on a cost standpoint. So, what's our monthly lease rental expense? Scrolling down, we can see we have the balance sheet and income statement. I have mine set to month to date, but you can toggle over to year to date. From an operational perspective, we're going to see things like our lease status. So what's active in evergreen or in a renewed state. Maybe we have some leases, or in this case, we do have a lot of evergreen leases, right? So let's see how that is trending over time. Do I actually want to drill into that and get a sense of, okay, what are these evergreen leases so that we can cut down on that? Make sure we go ahead and return those assets or renew them and get a new asset in. So here is my list. The other side of this is going to be the lease classification. So we see some indication there. If we want to drill into any of these things, just like I drilled into the evergreen amount, I can double click in and see my right of use asset, get some details there. So that's our first step. We log in, we get our overall details. The next piece I like to do is highlight the to-do list. So when I look at my to-do list, we'll see I just have three categories for me. That's going to be approve a deal, approve an end of term event, and document my end of term intentions. So approval, fairly straightforward. There were either a new lease or an end of term event that I, as the approver, need to go in and approve. So that's what using the approval workflow would look like. Now down here, these are more going to be items that focus on that asset lifecycle management. So when there are leases coming up for end of term, if I open it up, right, this is me asking the asset owner, which in this case is me because this is my to-do list, document an end of term intention and record a note with any additional details. So what are we going to do at end of term? Are we going to renew and maybe add in a comment as to, why or that decision process? All of those comments and those decisions or intentions are going to be available in my reporting so that I can get a sense of what's happening with my leases coming up end of term. Again, all hyperlinked, so I can just click right to them and view the details. One thing I didn't cover on the dashboard that I just want to highlight really quickly is this fiscal month and a ledger. So I am working with multiple ledgers in my environment. That can be because I'm reporting under different standards like ASC 842 and IFRS 16. Maybe I have a local statutory ledger for that local IFRS in Europe. Or like I have for ERPY and ERPX, I'm working with two different ERPs, maybe because of a recent acquisition or just because of the global nature of our business. I have two ERPs, so I need different ledger configurations so that when I run the journal entries, they're in that exact format that I want, either so that I can download and upload with no intervention or have them directly sent over via integration. With all that covered, let's go ahead and actually dive into a lease. Now, I'm going to use the search bar up at the top, and I'm going to enter in the exact name. If I don't know the exact name, you can use some asterisks as a wildcard, maybe anything that contains office or mobile, and it's going to export to a list. But for today's purpose, since we're moving quick, I know the exact lease that I want, so let's punch in my mobile office. You'll notice on the left-hand side, the navigation bar opens up. So now I get to see a almost mini navigation bar, but just for this mobile lease. So I've got my deal history, summary, asset management, etc. So let's start with the deal summary, which is kind of the obvious place to start to get our summary information. Up at the top, I see all of my date information as well as just the details around the ownership of this lease. We can see the status. So this is actually one of those two renewed leases. And we see the updated effective end date, which is different than my original. I can see my IBR as an exception, as well as my IBR when I changed this amount, and my reasonably certain end of term option, as well as my accounting classification. Down at the bottom, I have all of my reclassification events. So my end of term event is highlighted in here as well. Scrolling down, I can see all of the terms as well as the full payment schedule, which we can see is updated here. The place I like to go is just to show off the history really quickly. So here is where I can see all of this events that have taken place. So I actually recorded an impairment with this lease as well. That's why we saw that payment change drop off. And we see who made the change, when it was made, and all of the necessary details. If I were to record any events on this lease, we can see here we have this event workflow, making it really easy to exercise whatever your end of term decisions are that you've loaded in originally. So it's a smart navigation window, highlights exactly what you've loaded in, capture those for you, makes it really easy to work through this. And maybe you're not the original person that loaded this lease in, so we go ahead and highlight the terms for you. When you're making modifications, you do have the ability to do it in the app like we're seeing now, or via a bulk import template if you prefer to do things in bulk. Another thing to highlight in terms of lease events or loading new leases into the system is down here in the bottom left-hand corner, we can see my closed period. So I've actually closed the books through April. I haven't closed them for May just yet. But what that means is that if I load in new leases or I record a lease modification or any activity prior to May, i.e. in a closed period, the system will automatically update and capture those as adjusting entries. It will not book entries in a closed period. Instead, it will create all the adjusting or catch-up entries for you automatically in the next open period. That way you're never out of sync with your ERP. You can access that via the month-end closing section here. Just a highlight demo, so we're not going to get into all those details today. If you want to explore that further, reach out to our team. Next piece I want to cover is reporting. So up here, we're going to see, start with our integration and tab, and this is going to be where we run our journal entries report. We know we have integrations for this, but we're going to see it in Excel just to walk through. So we're going to run this as a report. When we're running our reports, I think it's always important to call out that we do have as at or as of functionality. So you're going to have the ability to run reports as of a historical point in time. That's going to allow you to see changes. So look at your disclosures, your journal entries, whatever it may be before and after a change was made. Otherwise, the next couple options here are going to let you pick your time period and horizon. So when do you want to look at it and for how long? Schedule level. This is where you do have the ability to choose if you want to look at your level of detail at an asset level portfolio or schedule level. So we do asset level accounting, which is going to support any MSAs. So if you do have, an MSA with 10 assets on it, you're going to have the ability to do that accounting at the asset level or at the overall total schedule level. I think it's important to note that we do capture those asset level details, which is going to let you do asset level changes like a partial termination, an impairment on a singular asset, whatever it is. Otherwise, we just have some other options here that you can apply when running your reports, filtering, etc. Set of books as well. So I'm using my consolidated ledger, which is what we're going to use. In terms of what this report actually looks like, here's our journal entries for that Mobile office building that we were looking at. It's an operating lease, and this is for the first month of the lease. First couple columns here, just to call out, are going to be your currency details. Now, this lease is all in USD, but we do track transactional, functional, and reporting currency, all three of those, as well as the necessary date and rate information to allow your ERP to make that conversion. Columns G through J is where I have my segment. So I'm only using 4, but you do have up to 11 at your disposal to create that GL string. My chart of account code is here in segment 4. Again, reach out to our team if you want to see the way that you can create and always update and maintain those chart of accounts and ledgers in more detail. As for the entries themselves, we'll just go ahead and scroll over so we can see these details. First month, so we do have that creation of right of use asset. We split long-term and short-term or current lease obligation. So we're going to see that throughout as well. We've got our payment entries, our expense and depreciation entries. And then at the end of the month, we do a reclassification of long-term to short-term. Thing to highlight in the journal entries is going to be in columns X and Y. So for those that are interested in integration, it is a two-way integration, meaning we send the entries to the ERP and we also receive a file back that basically stamps them as accepted. So that's what X and Y capture. Next up, really quickly, just going to highlight our disclosure reports. So here is a period over period disclosure, typically done year over year. So that's what we're looking at now. This is what we call our quantitative analysis. This is going to have your lease costs, your cash flows, weighted average terms, weighted average rates for those two comparative periods. You'll notice here, if I click on this cell, this is a formula. So this summary tab, which has all the outputs that you need, does include formulas or links to our detailed tabs, where you can see on a lease by lease level how much every lease is contributing. There is going to be a total line down here at the bottom, which is going to make it really easy for you to just kind of prove out or give your auditors the comfort that they need when looking at these. Again, formulas included. Really helpful for doing any sampling at your end. The other report that we're going to walk through, the other disclosure report, is our maturity analysis. This is the 5-year and remaining disclosure. Again, output at a summary level with all the details that you need, with supporting detail tabs that allow you to see how much every lease is contributing for your own kind of edification, or again, if your auditors are performing a sampling. Now, the last report that I want to show is going to be our roll forward report. So this report, run over a period of time of your choosing for the population of your choice, gives you that opening balance as well as all the activity during the period broken out by category. So we can see additions, impairments, payments, reallocations, etc., followed by our closing balance over on the right. Now, this this report does output, as we're seeing now, as a pivot table, which makes it really easy to double click into this and see exactly which leases, the journal entries themselves, that are contributing to these events. So we see here the schedule itself, or the lease name, and then in the comments you're going to get that as well. Also, just to call out here for this one in particular, this shows an example of what an adjusting entry would look like. So if you do have any of those adjusting entries, it's going to show up just like that. Oh, sorry, I just got a notification that you are all seeing the wrong screen. So let me really quickly jump back here. Share the right screen. There's what that roll forward looks like. Hopefully I described it as you were envisioning with that journal entry breakdown. And I guess we'll kind of backtrack through these. I'm not sure if it was all coming through, but this is the journal entries, which I think would look kind of as everyone would expect. The maturity analysis, the 5-year and remaining. And the quantitative analysis, which is that period over period view. So that is everything that I wanted to walk through today. I know that's a really, really quick, high-level view of things, but I think that should give a sense of kind of the accounting compliance that we're going to create in the system, as well as some of the updates that you can drive around asking team members for updates and collecting kind of those end-of-term decisions, having that detail level at a report level as well. So I do want to give everyone some time for questions. We've got about 5 minutes, so I'll just see if there are any questions.
Excellent. Well, thank you so much, Blake, for such an insightful presentation and demo. As a reminder to the audience, you can still enter questions, and we can go ahead and review a few that came through. So, Blake, this first question asks, what upstream and downstream processes are most critical to automate in order to improve the overall leasing program?
Yeah, that's a great question. So upstream, I think about getting data together and into a system. So for getting data into the system, that's going to be pulling it from either real estate, if they're real estate leases, or an equipment system, if they are equipment leases. Now that's where our integrations come really come in handy, making that incredibly seamless, not having to have any human touch. Those integrations can really come into play. And even if they're not, done via integration, having automatic alerts is going to be really helpful, just as a reminder to A, the accounting team, but B, the users as well. So thinking about that to-do list, collecting those updates. So having that email automatically go out to whoever's the actual owner of those assets, be it equipment or real estate, and asking them for updates. So automating that collection process, even if we still are doing a bulk upload and download. Downstream impacts, that's going to be getting information out. So journal entries, integrating that with your ERP, or at least automating them so that they can be downloaded, ready to go and uploaded. But then alternatively, I do think about operational data that other stakeholders are going to want. So having the ability to automatically have reports that will show you, hey, end of term, this is what's coming up. This is what we need to be aware of, and roll that up to stakeholders. I think having those reports is also going to be really important. And I'll just share one really quickly so everyone can see it. But here's an example of assets that are approaching end of term in the next 90 days, I believe is how I ran this. So we can see in white all of the ones that haven't been updated versus the ones in blue where we do have a status indicated here. So this is where the team members have actually told us what's happening, and the team members are going to be named in this report as well. So that way I, as maybe the responsible party over this business unit, know exactly what the status is, the comments, and then if I go in here and pull this open, I know who to reach out to get these updates.
Excellent. Thank you so much, Blake. This next question, what does it take to manage the lease life cycle at an enterprise level versus a department or business unit level?
Yeah, great question. I think a lot of these reports are really going to come in handy for that process. Ultimately, at an enterprise level, you're probably dealing with multiple departments and business units, kind of that disparate model, if you will. So it's going to be collecting updates from them, in an automated fashion. So having automated reports go out, notifications, etc. I think that's where that enterprise level is just an easy way to consolidate and pull together data from multiple business units, collect their status updates, etc. At a business unit level, you're probably closer with your actual end users and stakeholders. So same goes for having those notifications automatically go out to them, and maybe being able to put together a stakeholder scorecard with these reports. So, easily determining which location is giving us updates on time, which locations are behind on telling us what's going to happen at end of term. That's the data that you're going to be able to put together, with these reports and with this kind of centralized solution.
Great, thank you. And it looks like we have time to squeeze in one last question. Are there any risks involved in automating lease management, and how can these be mitigated?
I mean, that's a great question. There are risks with everything. The biggest way in terms of mitigation that I've noticed is proper implementation. I think our implementation team does a fantastic job. So being able to make sure that everything is configured and set up initially the right way, but then also testing with you along the process. So having proper UAT testing, making sure it's running, and doing a month-end close in parallel with your existing process is going to really kind of make it a smooth transition. And then working with you down the line, right? So keeping in touch, checking in on how things are going. To me, I think that's going to be the smoothest process, and really make sure any risks are called out initially and properly taken care of.
Perfect. Well, that is all the time we have for questions. Thank you again so much, Blake, for an excellent thought leadership. I also want to thank everyone else for joining us today. This session, along with all of today's content, will be made available on demand following the event. Our next session will begin shortly at 1 p.m. Eastern, so please click on the join button that will appear on your screen to be redirected, and we look forward to seeing you there. Thank you again, Blake.